Did you know that the average human lives around 28,000 days? How many of those days have you spent already? How do you make the remaining days fruitful and worth it? Hey guys, I'm Carl, and in this channel, my goal is to help you reach your biggest financial goals through small investment tips and tricks, concepts, so that you can have better mindset in terms of spending your money and investing in greater things, investing in tomorrow. In this video, I will share with you how to live your biggest financial goals by getting protected today. I learned this concept from Dr. Sanjay Tolani and I'm sharing it to you today. Let's start. So, humans lived 28,000 days, and that let's try to analyze. The 28,000 days is actually 80 years. So if this is 0, this is 20 years, this is 40 years, this is 60 years, and then this is 80 years. All right? So in your first 0 to 20 years, you are still not earning income. And this is when you study, you go to school, you enjoy your life as a youngster. From 60 to 80, this is where you're already retired, right? So it means you're not earning money for half of your life, approximately half of your life. And you are earning everything here. So essentially, what you do here in your 20 to 40 and your 40 to 60 is actually to prepare for these years coming, right? For 60 to 80 years old. So during 20 to 40s, you get your first job, you get your first car, you get your first house, and then maybe you get married plus kids, right? Okay. And from 40 to 60, you get your most probably second or more job, and then you get your second job, and then you get your second car, your second house, most probably, or investments, and your kids are already here, living their 0 to 20 years old. If you're in the 20s to 40s and you're in this stage, there are major fears, and this applies to whoever. So right now, I'm 30 years old, so I'm here around. And here, it's like 50 years old. But these fears exist for everyone, regardless of your age, as long as you are here in this bracket of 20 to 60. But I think it's more intensified the earlier you are in the cycle. So, what are the four fears that we have? Number one, first fear is, what if I cannot work until 60? Okay. Second would be, what if I cannot live until 60? Third would be, if I can work until 60, I can live until 60. Then the next thing would be, I would be retiring, right? So if I would be retiring, the next fear would be, how can I live until 80 happily with my lifestyle, right? Without being a burden to my kids, traveling the world, or maybe relaxing at my own retirement home, sustaining my needs and wants. This is the next fear. You don't want to be a burden and you want to live your best life after working so hard from your 20s to your 60s. And the next fear would be, how can I ensure that my kids will live a happy life, right? So these are the four fears. What if I cannot work until 60? What if I cannot live until 60? And if I can live past 60, how do I live my life? 60 onwards. And the last would be, how do I make sure my kids are happy? Okay. So for problem number one, okay, if I cannot work until 60, there will only be two factors most probably that will prevent you from working, right? Number one is critical illness. And number two is disability, right? If you got into an accident, whatsoever. So critical illness. This is when you are having a terminal illness, hence you cannot work. You are hospitalized. And the second would be disability. So as financial advisors, this is primarily one of the main concerns to get you protected from critical illnesses and to have your income replacement just in case you get disabled. This means you get to continue life until 60, right? So this is meant for you to continue your life until 60. Second problem, what if I cannot live until 60? So it means somewhere along the process of 20 to 60, you die. That's it, you die. So what's going to happen with your house, with your car? What's going to happen to your kids, to your family? Therefore, the answer to this with our products is actually life insurance, right? What you call death benefits or sum assured. Something that you get when you die. For the third fear, so saying you've already surpassed 60 years, no? Because you have critical illness coverage, life insurance. So, life insurance, so ibig sabihin, life insurance means you didn't take this. Good. You reach 60. And then, if you got critically ill, you still got coverage. You reach 60. You got disabled. You still got coverage. You still reached 60. Right? Great. Now then what? You're already 60 years of age, 65. Now you're retiring. So the next question is, how much is your retirement fund? Okay? Retirement fund would differ from person to person. It depends on the lifestyle you want to have. It depends on the dreams you want to accomplish at ages 60 to 80. Because some people want to travel the world. Some people want to have multiple properties, to invest in multiple businesses. But for the majority of us, we just want to relax. We work from 20 to 60, and now it's time to earn what we work hard for, which is the rest. The rest, the peace, the time to actually relax and just enjoy life. So then, how much would be your retirement fund? You discuss it with your financial advisor. But the good thing is, if you got a VUL, then the coverage you used, this point, the critical illness, the disability, the life insured, it can all translate to fund value. Means that whether you use this or not, if your policy subsists at 60, then you've got something to withdraw to use as your retirement fund. Great, right? But if you did traditional insurance, then there would be no fund value. So it's up to you. Traditional insurance can have all these, but the only difference of a traditional insurance from a VUL is that a VUL has fund value. It accumulates investment for you. All right. So the last thing, and I think this is the most important thing for most of us, is how do we make sure that our kids are happy once we pass out of this world, right? So then again, the answer would be number one, critical illness coverage, disability coverage. Why? Because we don't want to become a burden to our children. We want to make sure if something happens to us, we can manage because we have our own protection, right? They won't have to get loans from the bank. They won't have to jeopardize their budget, their finances, their emergency fund because we got sick. So having protection and a high protection at that when we retire means we get them peace and we give them financial stability, which means they can be happy. Life insurance, just in case that we die, of course. After retirement, after enjoying everything, the only thing that's definite for us is to die. So if we will be resting forever and ever, we want to rest assured that the sum assured will go down to our kids, meaning they can live a better life. It's an assurance that we can provide them some sort of an inheritance, even if we were not able to get a lot of property, we were not able to save up on the bank, at least the very least that we can do is get ourselves insured. And ultimately, and I think most parents would agree, here in the Philippines, we always say that education is the only thing that parents can give to their children that cannot be taken away. Education is so important because when you invest in quality education, you have some level of assurance that they know what to do to survive in life and they got the skills to get them the income that they need. And we have to combine that with proper upbringing, with a good financial mindset, teaching them how to invest, how to get insured, so that their children, your grandchildren, will most probably live their best lives as well. So you have to teach them young about the importance of having insurance. And the good thing here is if you started your investment, your insurance early, your fund value can serve as an education fund as well for your children, right? So let's say when you were still single, when you started your job the first time, you knew at 20 years old, or at least now 22 years old, okay, I'm going to have a family later on. Then getting your insurance and all these coverages early on in life means you pay less premiums for that higher coverage because it's cheaper. You have less risk because you're younger. You also accumulate more fund value because you started earlier. That means your fund value can even fund the education of your children once you reach your 40 to 60 years life and they start their education, then the fund value can support here. So I hope that you learned a lot in this presentation and that if you have questions as to how to get all these coverages, please reach out to your favorite financial advisor. And as always, my goal is to give you your best life by reaching your biggest goals. And that starts with investing today so that you can invest in tomorrow. I'm Carl. Thank you so much for watching. See you in my next video.